Hey, good morning, it's Owen Biglang. This is the Inside Edge video blog. This week I wanted to talk about the psychology of successful investing and what the type of mindset you need to have to pull the trigger, when to know, and being able to pull the trigger on any major investment decision, whether that be buying your first home, your first principal residence, buying an investment property, or buying a stock. Now, I'm going to use a real-life example. It's April 8th, 2013. I just got off my computer at TD Waterhouse, and I just bought some shares of Apple, the computer maker. Now, if you've been following the financial news over the last 7 or 8 months, you'll know that the share price of Apple has absolutely plummeted the last 6 months. It was trading at about $708 a share 8-9 months ago. It's currently trading right now, and I just bought it for $423 a share. Now, why am I talking about buying Apple? Because it has to do a lot with the psychology of what it takes to pull the trigger on an investment. Now, I bought Apple at $423 a share, and I'm willing to put my money where my mouth is and broadcast it here on my video blog. Because there's really two camps out there right now when it comes to the company Apple. And it's the same thing with Vancouver real estate. There's two camps. Let's go back to Apple first. Camp A, or Group A, looks at the share price of Apple right now and says, that doesn't surprise me. Apple isn't innovating like they used to. Their market share is getting eroded away by companies like Samsung, and they've lost their way. They've been milking the iPad and the iPod and the iPhone, and future doesn't look too bright for them. That stock is going to continue to go down. There's a lot of analysts out there that are calling for Apple to go below $200 a share, and I guess time will tell whether they're right or not. Now, that's Group A. Group B, you can put me in. As a long-term value investor, I look at Apple now off more than $300 from its high. I look at the fundamentals of Apple, the PE ratio, the people that are working for the company, what they've got in the pipeline, and I don't think you're going to keep a company like Apple down for long. I think at $423 a share, I think it represents a pretty good buy, especially. This is so important if you're a long-term investor. I'm not a speculator. I don't buy stock and then sell it a couple of days later and try and make a quick dollar. I buy it, put it away into my RRSP or my TFSA and hang on to it and let all the magic happen that way. So when I pulled the trigger this morning, though, I knew that buying it at $423, I've done my homework, and I think I've mitigated a lot of my downside. But there's always going to be some downside there. Apple could easily drop another $30, $40, $50 a share. But guess what? I'm comfortable with it, and it doesn't matter to me. All it is on paper. I'm looking to buy the stock and hold it. So what it does in the short term, just like real estate, shouldn't matter to you. You're an investor, you're not a speculator. Now, the other great thing about Apple is I never would have bought Apple a year ago because it never paid a dividend. But Apple has got so much cash, about $160 billion with a B, sitting on the sidelines that they started paying a dividend last year. Now, they're going to probably end up increasing that dividend later this year or next year. Right now, it's at 2.5%. It could easily go to 3.5% or 4%. So they're going to pay you 4% dividend just for holding the shares, which is a win-win situation. So I bought the Apple, I tucked it away, I'm going to get that 3.5%, 4% dividend yield over the next coming years, and I think Apple, over the long term, will go up. Now, it's the same thing with Vancouver real estate. It's 2013, our prices are off about 5 or 6% from their highs a few years ago, but there's still two camps out there. There's Camp A, or Group A, that says Vancouver's still in a housing bubble as far as prices go. Prices are going to come down 30, 40, 50%. Now, a lot of these armchair quarterbacks have been saying this for 10 years. Now, we had a correction back just 4 years ago, 5 years ago, in late 08, early 09. Prices dropped about 6-7% very quickly. But if you remember, they also shot back up about 6 months later. Now, again, 2013, we're off 5 or 6% from our highs. They're kind of treading water right now. Could they go down another 3 or 4%? Who knows? But you have to remember that you can never time the market absolutely perfectly to hit the bottom. It can't be done. You'll never know where the bottom is in a market, whether it's buying real estate or buying a stock like Apple, until it goes down and starts to go back up again. then you'll realize, yeah, back there 6 months ago, that was the bottom. You're always going to be late on it. So just like Apple, I don't know where the bottom is on it, but I think we're getting pretty close, and I'm willing to hold it for a while. Same thing with real estate. If you think now, hey, prices are off 7 or 8%, maybe now might be the time. Now, could it go down another 3 or 4%? Maybe. You've also got to look at your mortgage rates right now. They're at historic lows, 2.99% for 5 years. Will those stay at that low rate forever? I don't think so. So that Yaletown condo today is a fair bit less expensive now than it was 6 or 7 years ago. And a lot of people don't realize that. Now, if you've got the down payment, you're working, you're able to support the mortgage, now might be the time. If you've got a long-term horizon, like I've always said, the magic with real estate happens after 10 years, then it's a perfect time to buy. Don't listen to the naysayers and what's going to happen in the short term. In the long term, just like Apple, it will continue to go up. Food for thought anyways. I'm Owen Bigland. Hope you learned something. You can always comment on my YouTube blog whether you agree or disagree with what I'm talking about as far as the psychology of investing. Remember, you can't time markets. The old analogy, buy low, sell high. Unfortunately, a lot of Canadians do the reverse of that. They buy high, panic, and sell low. If you just keep it, buy it at a good valuation, like what real estate is now or what Apple is right now, I think. Buy it, hang on to it, you'll do absolutely fine. So comment on my YouTube page. You can also start following me on Twitter. I'm getting a lot of Twitter followers now. My handle there is @OwenBigland. Thanks for watching. I'll see you next time.